Rob, welcome back. We have some really good questions this week. A couple of them are a little bit salty, but that's all right. We take the good with the bad.
Hey, Brandon. Yeah, it's getting a bit chilly down here, down under, which gives me a good opportunity to wear my HederaCon merch.
There you go.
So hoodies are out and de rigueur. Let's get into it.
All right, we'll jump right into it with one from Dude Man 2 who asks, with Hedera's fair ordering, does that counteract any speed advantages that other L1s may have, but also have MEV issues? Now, I am going to push back here just a little bit. Now, there could be some confusion around blockchains versus Hashgraph, again, in this situation, because Hedera has with the Hashgraph algorithm has true finality, where a lot of the other blockchains out there, they're probabilistic. So you have to have a certain number of confirmations to feel comfortable that that transaction isn't going to roll back. Now with Bitcoin, famously, a lot of people know that's usually 6 confirmations for exchanges to feel comfortable. That takes about an hour. For Ethereum, it takes about 15 minutes. Now with Solana, and that's one of the ones that we could talk about being close to as fast as Hedera. With one confirmation, it might be 1 to 2 seconds. But really to feel comfortable with it, it takes about 30, 31, 32 confirmations before exchanges feel comfortable with it. But there are some applications that are built on top of Solana that just take one confirmation and they'll run with it. I think that's probably a mistake, and certainly for enterprise applications, that's going to be a mistake. So that might be one of the things out there that people are a little bit confused about. But, I think that Hedera is very close to top of class when it comes to the speed, but that fair ordering is another aspect that brings something to the Hedera table that other networks might not have. What are your thoughts?
Yeah, well, fair ordering is, if not the secret sauce, it's one of the superpowers, I think, of Hedera. It really does make a difference when you're an enterprise user or builder, that you've got this absolute finality. And quite rightly, you say blockchains are probabilistic. They absolutely are. There's always a probability, however small, that chain can fork or can roll back. When you're using real money, or there are very significant outcomes, commercial consequences of something like that happening, blockchains just cannot be considered. And that's why we in the past have favored private chains, but that comes with all sorts of other trade-offs. So a layer one, which is really important, right? It's a layer one, not a layer two where you've traded off or compromised. As most of the layer twos are in terms of gaining scalability, they're actually parasites on the layer one. They're extracting value. And we're seeing this with Ethereum, right? Ethereum has really struggled over the last couple of years with the proliferation of layer twos. They're extracting value just like a parasite. We don't have that with a layer one. And a layer one built on a hash graph with this fair ordering enables it to not have these MEV issues or this kind of chance of rolling back. And MEV leads to the risk of front running, which erodes trust, introduces all sorts of other consequences that we simply don't have with Hedera. So yeah, absolutely, I think the fair ordering as a feature of the network enables us to push back against any of the other, very single-minded, thoughts around relative scale and speed, because there's no point in having speed if you've got these other risks that you have to consider as an enterprise builder. Even as startup builders or full Web3 builders, we don't really want to get into the state that we had a few years ago where chains were forking left, right, and center. I don't think we probably will see that again, but if there is a risk there and there is a option to build on an alternate DLT that doesn't have all of those risks and those potential consequences, then why wouldn't you choose the DLT without those problems, which is Hedera?
It makes perfect sense. And, it's one thing when you're trading fartcorn back and forth, but it's a completely different thing when you have MEV issues, when you're trading Apple stock and you're doing high frequency
100%.
trading and things along those lines.
Yeah, exactly.
All right. So the next one we have, this is kind of a fun one. It comes from Wolf of Warrior Street, who wants to know what H or HBAR slash ACC means. And what it generally means is Hedera or HBAR slash acceleration. It comes from our friend Zepper. At least he was in the team that kind of came out with it. But I thought this would be a fun one just to kind of take a look and see what Gib has to say. So if you ask Gib on the Gib.chat, it says the term H slash ACC refers to a program or initiative by the Hedera Foundation designed to support and accelerate the growth of projects and applications built on the Hedera network. This program typically provides resources such as funding, mentorship, and technical support to developers and entrepreneurs looking to create innovative solutions using Hedera technology. So, Rob, have you tried out the GibChat yet?
I have, yes, it's great fun. I love what those guys are doing, and Gibbs a great meme on Hedera, one of the best actually. I think it's true meme.
I like how there's other utility coming out around some of these memes. Smack'em is a great example. Gib is a great example. It just goes to show that Hedera attracts the kind of community that can really build some cool stuff.
Well, let's not forget our friend Grelf, who is the Uber meme on Hedera, I think. Although he was preceded by others, and Dino as well, because that's in our DNA.
That's right. All right, so we're going to move on. We're doing pretty good moving with the flow here today, Rob. Let's go to Big Lock 5012. This one's a little bit salty. He says, longtime viewer, first-time commenter. The first question that no one ever asked these developers is if they have invested their own money into the token. In my opinion, I think these guys just use HBAR as a piggy bank and have no true belief in the project. I would like you to ask that question. So, Rob, there's a lot of different developers that are building in the ecosystem, certain ones at the organizations. There's ones building the different applications on top of Hedera. But I can tell you one thing. There might be a few, completely randoms out there that don't believe in the network. They're just here to get a paycheck. But the vast majority, I would say 99%, believe in this network wholeheartedly. And when it comes to, getting compensation and things along those lines, everybody knows my thoughts around the organizations. I think they should get paid a reasonable salary and then, maybe a 20% HBAR bonus kicker or something like that. I think that is something that needs to be addressed, and I think it should be addressed publicly. But when it comes to all the application builders out there, I know for a fact that a lot of them started as investors in HBAR first and then decided to build on the network because they believed in the technology. And then we even have a public company in your neck of the woods, Rob, Novitech, who is putting it on their balance sheet. So there's a lot that are getting out there and participating, not just in building these applications, but also the HBAR economy as well.
Yeah, I mean, I don't know that it's that salty. It's a valid and a legit question. However, I'm not sure what he means by these developers. I mean, we've got a growing developer ecosystem, and of course, all opportunities attract all types, right? So there'll be those who are more mercenary or looking for the right tech for the wrong reasons, or have the wrong idea and are just serial startup founders who never quite make the grade. There'll be grant tourists that have been just hopping between chains to get grants. But I think we have become a lot better at identifying those and not funding them within the organization. And then of course we've got, as you say, all the diehard H-barbarians, even such as yourself or Brandon D or Brady at Bonzo, and the list goes on and on. Those who have actually been around long enough, who have completely bought in, quite literally through investments, but also because they love the technology, and are seeing opportunities to build on Hedera. They find the niche, they find the gap, they work out where the innovation needs to be. They maybe look somewhere else and on other chains and what's doing well, and then they kind of bring those ideas across to Hedera. That's an ecosystem that's flourishing. Is there overcomp? Perhaps, I don't know. I haven't seen, because as you say, it's not transparent. But I like where we are in the Hedera ecosystem, because I think we've got true believers. sufficiently scattered around the ecosystem, around which we're getting some great developments, some amazing innovations and great ideas, especially some that are uniquely leveraging the very unique features that Hedera brings over and above, a normal DLT, if there is such a thing. And then, of course, we've got the Hyro open source project through the Linux Foundation decentralized trust projects that now are attracting more and more developers coming into the ecosystem through their Linux association or their familiarity with using open source. So, that's attracting more and more growth at the grassroots level, which will only expand and allow for more and more development to happen. The early stages of any chain, I think, attract all sorts, but as it matures and settles down, and that's the kind of the stage we're in now, I think we're kind of just getting to that point of maybe first stage maturity, maybe adolescence. But at that point where you're attracting new people coming in from Web 2 who find it very easy to use the tools, that like the capability, love the enterprise grade features, and then we're going to go from strength to strength based on that.
Well covered. All right. So the next one comes from Professor HBAR, who says, since Rob mentioned that there are one or more approved companies set to join the council and haven't yet been announced, is he able to share how many have been approved? If yes, can he provide a number? So, Rob, when you give them an inch, they're gonna want some more. Can you tell us how many have?
More. No, I've said too much already, so no, I can't.
All right. We'll let that go, and we'll just wait for the public announcement. So the next one comes from No Man's Internet, who says, H2 fast approaching. Seems like the majority of H1 soons are once again turning to H2 soons. When does the BS and the hello future actually begin? I'm talking verifiable proof of multiple scaled live use cases on mainnet. Bigfoot vlogs are more real at this point. So, Rob, okay, this one maybe has
salty. That's salty.
That one's a little bit salty. All right, so I will say that I have been impressed with some of the developments in H1 so far. The big one, I think, just came out last week, and that's with Vera. Now, we didn't get the interview this week with Vera. Hopefully, we'll be able to get an interview next week, but I think that's a really big development. Also, some of the infrastructure that's being built around our stable coins, with Binance and Crypto.com. I think that's really important as well. From your perspective, what are your thoughts?
Yeah, I don't think No Man's Internet's been paying much attention, to be honest. I think there's, if he's looking for verifiable proof of multiple scaled live use cases, then of course it takes a while to get there. But you've got to look at the signs and read between the lines and see what's growing. In the deep in space, in the AI space, in the sustainability space, like you say. The Vera news last week is astronomical. I mean, it really is quite the most incredible, still under the radar announcement that you could possibly have seen. All of these things contribute to this growing tide, this head of steam that's growing across so many different areas. Tokenization, real world asset tokenization is just a massive theme this year, in addition to those other three. So you can't please all the people all the time. I am quietly confident that, as I always am and always have been, that these things, all the right things are happening, and the growth is there. We've got a Hedera Governing Council meeting next week, an in-person meeting in Washington, D.C. And one of the topics is all the Governing Council projects. I'm responsible for overseeing through my UseCom chair role, not overseeing, but sort of monitoring and reporting in, and the news is good, right? The stories are great. They could be far better. They could be far more engagement, far more production delivery on mainnet. But those things are coming too. Yeah, I'm. You probably would say, Sharky would say that this, wouldn't he? But I am saying it, and I'm still confident.
Well, Rob, from my experience with you, you're not a BSer, so this is actually what you believe. But just going by his standard of having multiple verified live use cases at scale, then a lot of the opportunity would be gone. So if we knew that, all of those things were going to be built, there wouldn't be any discussion about, layer one was going to win. We would know it was going to be Hedera, and the builders would be flowing over here. You have to pay attention to those green shoots. You have to pay attention to the announcements, because by the time you get to the point where those things have been built, and we do have the majority of the market share in terms of transaction volume and revenue, all that kind of stuff, the opportunity can be gone.
Yeah, and we talked about the developer ecosystem earlier. It's really essential at the enterprise, at the top level, with the big use cases. It's really essential to have a vibrant and strong developer foundation, developer base. And I think traditionally we haven't done enough to attract more developers into the ecosystem. That it's a pyramid, right? The top of the pyramid, these enterprise use cases require all of the base below it, and a super strong developer advocacy group that actually every developer comes with one or more great ideas, and they have the tools at their fingertips, literally, to start building and innovating and testing. And this is what the developer community does all the time, and it shares and open source and everything, and it just kind of drives. It's the engine room that drives all of this activity that percolates up to the enterprise use cases. As an enterprise builder, it's very hard to make a technology selection without a strong support of developers, either internally or externally, to do that. You might be the world's biggest champion in Hedera. If there aren't people within your organization that are supporting that case, it's a very lonely place to be. Trust me. So having the developer support, having the architects, having the lead engineers, having the CTO, kind of nodding in agreement and understanding, takes a long time, because that's the percolation that comes up out of that developer community. So we're in a position now through Hiero and through the work that we're doing, the amazing work actually, all these hackathons we talked about. You talked with Jafar last week about the $1 million hackathon in Africa. These are the sorts of things that draw in developers, maybe attracting them with prize money, but once they're here, they see how great the tools are and how much variety there is, and then they start building, and then they stay. And then that kind of brings all the businesses up a level. So it doesn't happen overnight, but it really is happening. And I think we're in a very, very good place.
I'd agree. All right, so we're going to do one more with you, Rob. It comes from Christian, who asks, given that Hedera has a unique approach to network fee pricing, pegged to the dollar yet paid in HBAR, do you think this unique approach to pricing network fees will have a negative impact on the long-term price appreciation of HBAR? Now, Rob, I know that you can't talk about the HBAR, but the way I look at this is whoever has the right fee model, whoever has the most overhead where they can have the lowest fees, they can have them set up in a way that the CFOs and the businesses can use them most effectively. Those are the ones that are going to win out and win market share and bring value across the entire network. What are your thoughts?
Yeah, it is. It's part of a kind of general growth strategy. We haven't actually changed the kind of the core principles around transactional pricing since the beginning. So, the 100th of the US cent was set by Lehman Baird right at the beginning, and it continues to be, a kind of sacred cow of the pricing infrastructure. It doesn't mean it will never change, but the longer we go and the more applications are built using that pricing, and all of their commercial viability and their own customer pricing is based on the transactional fees that Hedera sets, it becomes harder and harder to change. So, 100th of a cent, 10th of a cent are, kind of core principles almost. Our, Hedera Governing Council, or Hedera Council as it's called now, and the Treasury Committee, CoinCom, do consider changes over time, and the commercials of the network, the economics of the network are constantly under review. CoinCom makes recommendations, but the council itself kind of deliberates and ultimately would vote on any of those changes. I think, what Christian's saying, it's great to have questions from Christian because he's obviously got unique insights into the way that Hedera operates. And I suspect there are, questions between the lines in what he asks. But he says, do you think this unique approach to pricing network fees will have a negative impact on the long-term price appreciation of HBAR? I think it might. The greater the pricing, let's say we do away with 100th% and everything's a 10th%. So you got a 10x on the on HCS and HBAR transactions. You'd have a lot fewer transactions because of that, because there are use cases that can only operate at 100th%, sort of high volume logging type utility. So I think it would probably level out. It would smooth out over time, or you'd attract fewer of those use cases that use, the lower cost transactions. Where we are in the life cycle of Hedera, I think we need to attract more and more of these this utility to drive the usage of the network, and with it the revenue, which is basically what we're talking about with the transaction fees. The revenue of the network grows and it becomes sustainable over time. But as I said, the longer we leave it, the harder it is to actually change those transaction fees, significantly. It might go from 100th% to, double that. But even that is quite a significant, uplift. So I don't know. There is no suggestion at the moment that the fee schedule is going to change. It's very good when one is selecting a technology, one is selecting a network such as this, to have certainty around the fee schedule. And could it have been different from the outset? Would it have made a difference? I don't know. We are where we are, and I think we're in a pretty good place. So we'd all like to see greater revenue, but that comes with utility. So let's push for greater utility and more usage, and then we'll get to the network break even point, and then into the black far sooner than we would otherwise be able to.
All right. Well, again, well covered, Rob. I actually have one more for you that we wanted to get into. It comes from HBAR Guns, who says, "Hi, Rob. What measurable outcomes have come from the 2024 Hedera Indian Hackathon co-hosted with IDS and STPI? Are we seeing sustained developer retention, enterprise integration, or on-chain activity from these events?"
Yeah, I love this. There seems to be a theme this week. We're talking about the developer ecosystem a lot, and the hackathons and, Hyro. And this is where we should be talking, right? This is the grassroots. This is the growth of the network. And this question actually is really pertinent. So there was last year this great India-wide hackathon, the Blockchain Bharat Yatra, which the Hashgraph Association sponsored. I guess it's a little early to get true metrics out of how that progressed. But I spoke to some of my friends in the Hashgraph Association, and they said that they are seeing a lot of engagement now in India, largely off the back of that. There are obviously other initiatives that are underway in India as well that THA are driving, but it is still a little early to start actually quantifying it. That particular event gave us huge visibility, and it's opened many doors, in particular with government and enterprise clients inside India. Like I said, if you capture the developer community, then that influences decisions within business and enterprise. So Hedera is now much more of a well-known protocol in India than it was even last year or 2 years ago. And some of it is down that increased interest is down to sustained brand building that happened through that nationwide Bharat Blockchain Yatra event. Developer community in India is definitely growing. The hackathons create a huge buzz in the developer entrepreneur space. And that's evidenced by, a great deal more increased curiosity in Hedera. There's kind of, as I said, brand recognition. There's a lot more, understanding of how Hedera is differentiated from some of the other, more well-known protocols that have been used out of India over the last year or two. In terms of enterprise adoption, there have been some pretty significant events coming out of India, which I think is really indicative of a lot of this happening. Both the hard work that the THA team are doing in India in terms of raising the profile of Hedera, but also coupled with this grassroots sort of hackathon approach. And most notably, the KPMG India announcement that was made, where THA and KPMG, one of the world's biggest consulting firms, are going to market together using Hedera technology to solve client problems of KPMG. And as a former PwC consultant, I understand entirely what that model looks like, and it's exactly where we should probably be pushing a lot of our enterprise effort, utilizing the networks of the big four. That includes Deloitte. Deloitte, is another company that has global presence massively in the emerging tech and innovation space. And along with KPMG and PwC, Deloitte and Ernst & Young, the big four, are great potential partners. They play in largely the same space, but they have particular practices under particular partners that specialize, and they're the people whose hearts and minds we need to win. And I know both the foundation and THA recognize that in different ways. So KPMG India is a great example of that. The incentives of going to market together with ready-made solutions, with the open source approach and verifiable credentials. In terms of not in digital identity terms, but a consultancy always likes to go to a client with a list of credentials of where things have been built and how they've been successful previously to support their responses to RFIs and tender requests. So I imagine all that is happening in India, and obviously India is one of the hugest markets in the world, with over 1 billion people and some massive businesses. So. And we've got a lot of governing council members in India as well, with Tata Communications and IIT Madras. So there's a lot going on in India, and I think these sorts of hackathons and the consequences of that raised profile can only be good. So in short, Hedera is now a hugely strong force and growing in India, and I suspect they'll continue to push there until we're the top protocol of choice across the subcontinent.
Well, that's definitely the goal here, Rob. So we do have a few other questions that we wanted to get to. They're going to have to wait for some subsequent weeks here, but we want people to keep sending those questions to us. You certainly do a great job at addressing all of them. We appreciate the time that you give us here, week in and week out. But Rob, that's all we got. We'll see you next week.
Probably the week after, because we've got the governing council next week. So hopefully I'll have some juicy alpha to spill when I next come back.
Fair enough. In a couple weeks.
Cheers. Bye.